Hello guys, welcome back to my channel. This is Hakman Traders. In this video I'm going to be showing you how to not freak out in your trading career while trading in the stock market. Well, there are times when you take a decision and that decision might prove wrong, or that decision might go against you. Let's suppose if you long your position at some place uh, on the assumption that that a particular stock might go up, and it doesn't go up. Instead it starts to go in a downward direction, trade in a downward direction. So for that reason, how to not trade out how to sorry how to not freak out in that situation, and I'll be showing you what you can do to prevent that from losing your most of your account. So let's get started with that. Now, as you can see here, I've pulled up a chart. This is a great example for you to show you how to not freak out in this situation. Let's start from the beginning. You can see that this drop occurred due to the impact of the coronavirus. Now you can see here this was at 701 points. At this place, the buyers pushed the market up at to a high of 1451. You can see the third option right there. At this level you can see high 1451 1451 points. So at this level now the buyers are exhausted, and now the sellers are more dominant, and now they are selling the market and pushing the market in a downward direction. Now now you can see here that once they drop the market to this level, 1265, to a what is the low, 200 and 1251 1255 points. Sorry, I'm saying those numbers wrong. 1255 points to a low, and then it got a pullback to here. From that it started to trade in the downward direction, trend in the downward direction. The trend starts moving in the downward. So this is a great example for short your position. Now in this case, you guys might be wondering what to do. Like, you freak out in this situation, so do not do that. And what you do when you're fearful and you say that your fear starts to overcome you, so do not do that. If your fear overcomes you, you're going to risk your you're going to take much more risk than ever. So in this situation, what you can do is you can short your position here at this level here, maybe here. And for one reason, I've also mentioned this in my previous videos, that whatever goes down comes up again. Maybe not, it takes time, maybe not immediately, but it takes time and come back to that level. But you're going to risk those returns which you will have to, which you can make by investing that amount into other stocks or other assets that can give you returns. So let's suppose you have bought along your position here by the assumption that it might go up. Also, in this case, risk management comes into play. If you have invested in this point, let's say over here, and the stocks start to show a gloomy day. Now it's trending in the downward direction. So if you if you have purchased here, set your risk management here, place your stop loss here. So if it goes, you're going to risk how much of your amount. Let's say, what's the percentage over here? Let's say you have bought here, you will be risking, where is it written, 8% of your amount. So you're going to be risking 8% of your amount. Well, that's also much more than that. The minimum amount should be 2 to 3% or 5% or 5%, but this over here is 8.86%, closely up to 9%. This is a lot more than that. Maybe you can place it over here at this level here. So this is also a great level. Now how much is it? 6.42%. This is great amount. So risk management comes into play. And also, if you're thinking that how much profit will it give me? You can adjust this. This is the take profit. You can adjust this, and if you're still not sure and you do not want to like close your position, uh, let's suppose if you have bought 4 stocks in it, just an example, you have bought 4 stocks in it, sell 2 stocks at this level and keep the two. When it doesn't show like when it still shows the same results, the negative results, close also the two stocks as well, because you are not going to be risking much more of your account. Let's say you have closed your two positions here and the rest two over here. So this is a great example, and also by closing your position at these levels, short your position here so that you can get better returns, and uh, and you can overcome those recover those losses that you've made by making the wrong decision of investing over here. Now you can see here, I will not invest, I would not short my position here. As you can see that if I would invest it, I would invest it over here. Now if this got returned to this level, I wouldn't care, because it's trending in the downward direction. Now let's suppose, you can see for this, whenever the candlesticks touches this trend line at more than two levels, it means that it is a downtrend, and you can see it's 1, 2 and 3. At 3 level it touched this trend lines, so it's a downtrend. So now I'm not going to be investing in this one. I'm not going to short my position. I will leave it as it is, as it has went away from me now, and I'm not going to go after it, because I know if I do go after it, if I start to chase it, I will be taking a big risk in this level. Who knows, this might turn and starts to trend in the upward direction. Well, that's it for today. Hope you guys are enjoying my videos and want to learn more about the stock market. All I want you is to support my channel by hitting that subscribe button and comment down below, as your feedback is valuable for me. Goodbye.